Something huge happened today. A total positive game changer. Larry Fink, the CEO of BlackRock, a $7 trillion investment firm, said that his company will now make investment decisions based, in part, on a company's commitment to environmental sustainability. Hey, this isn't some little hedge fund focused on environmentalism. It's one of the most important investment firms in the world. So what does this mean for you? From now on, a company that can't prove it regards the Earth as a stakeholder is liable to get a lower price-to-earnings multiple because serious investors are now going to pay up for sustainability. That's a very big deal. I cannot stress this enough. For way too long, it felt kind of like that we were fiddling while Rome burns. Climate change is a serious threat to our future, but nobody wants to deal with it. Way too often, corporate executives and their shareholders simply don't care about this stuff. There's a lot of lip service, a lot of, well, we got to do more, but not much action. I get it. It's not supposed to be their job to care. Well, that ended today. Those of us who feel strongly about this issue have lacked a champion. Now Larry Fink is that champion. Not only does he manage the most money, he also holds the moral ground and is revered by almost every CEO I've ever asked about. Fink was self-effacing and emotional in his amazing interview with CNBC's Andrew Ross Sorkin, but his rigor is never in doubt. As he said in his note today, quote, the evidence on climate risk is compelling investors to reassess core assumptions about modern finance, end quote. That comment right there says, we don't care whether or not you believe in climate change. We will punish your stock if you don't do something about it. We don't care if you believe in it. Don't think of this as some sort of bleeding heart thing. It's purely a risk assessment. If there's even a 50% chance that the dire predictions of climate scientists are true, and I actually kind of think that they are, well, it's going to be very bad for business. And if capitalism can't regulate itself on this issue, you better believe governments around the world will eventually do it for capitalism. Fink will be introducing funds that will avoid fossil fuel-oriented companies. BlackRock will take to task those companies that don't do enough, something that could lead to some high-profile proxy fights that no company wants to be in. I scrutinize hundreds of companies looking for this the commitment and try to address every one of them. And every CEO who's on gets a question from me about this. It's necessary. Even if you don't believe in the issues, and I do wholeheartedly, you still have to care if you want to pick stocks because BlackRock cares, and they've got $7 trillion under management. Now, I often joke about how these issues can't really be factored into what you're willing to pay for a stock. For decades, I quite candidly, cavalierly said things like, well, what does that have to do with the price-earnings ratio of Bristol-Myers? I was contemptuous of anything that didn't directly relate to the earnings, and for a good reason. I was gaming the big institutional money managers. They didn't care about this stuff, so why should I? But after today, the big money managers do care, and that changes the equation, people. Boards will now ask CEOs what they're doing to help save the planet. Powerful investors like Fink will insist on knowing what a company's plans are to address climate change. Fund managers will start to sell stocks of companies that ignore these issues. Businesses will be forced to pay their executive bonuses based on steps that they've taken to reduce the company's carbon footprint, something that the forward-thinking Clorox already does, but I need to see more companies doing this. I got to tell you, Fink's actions remind me of the huge divestment movement aimed at punishing companies that did business with South Africa back during the days of apartheid. Many of us protested against universities that kept endowment money in companies that profited from the criminal apartheid regime. Initially, we were dismissed as dreamers with a quixotic streak. But over the years, the movement gained steam, and tons of companies ended up pulling out of South Africa because of our protests, which ultimately helped topple the regime. I think we're seeing the same thing with climate change here, and I'm thrilled. Fink's giving companies the cover they need to roll their sleeves up and stop hurting the darn environment. I say bravo. I'm glad someone with real heft is finally throwing their weight behind a hugely important issue when far too few executives were willing to take action because it might hurt their earnings. I think this was a bold and necessary move. But even if you disagree with me, you have to recognize that Fink has changed the calculus. If companies don't take action, one of the largest asset managers in the world will pay less for their earnings. Like it or not, sustainability now matters to the stock market. And if you haven't factored it in yet, well, the train is leaving the station. Stick with Cramer.
Take control of your financial future with the new madmoney.cnbc.com. Cramer's exclusive CEO interviews, full episodes, analysis, even your own soundboard. Plus, special access to Mad Money 101 with rules and techniques to break down the market for all investors.
The red flag that makes me drop a stock immediately is
It's everything you need right when you need it. The new madmoney.cnbc.com. Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.